Hello again. This is Robert Schein, Managing Director and Partner at Blanke Schein Wealth Management. Thank you for joining us. It's Tuesday, November 30th of 2021, and there's a lot moving markets today. Thanks for watching, so let's get right to it. So very important market moving news today. The Federal Reserve Chairman, Jerome Powell, was in front of the Senate Banking Committee, as well as Janet Yellen, the Treasury Secretary, and both of them did the 1-2 punch as to how they see the financial world unfolding in their world over the next few months and even maybe a year to come. And the most news-breaking headline today was the Federal Reserve Chairman Jerome Powell basically said that we can officially retire the move of, or the word transitory in the world of the inflation discussion. Now, if you've been following any of our updates, any of my updates, and we're closing in on 200 episodes, we spent a healthy time talking about the Federal Reserve, what they say, what they don't say, and also the actions as a result. But more importantly, it's the inflation conversation. Now, I have all up on the board here. I have passed 5, 6, 7, 8, 9, 10 talks on the word inflation, and basically Blanke Schein Wealth Management, our thoughts disagreeing with the Federal Reserve Chairman, saying that there's inflation everywhere we go. I was most recently quoted on Bloomberg Radio on Thanksgiving Day. And the link below, if you want to hear that, if you happen to miss that, on the international conversation with Bloomberg Radio, I literally talked about the word inflation and how it's here to stay and what the Federal Reserve needs to do as a result. Well, Jerome Powell must be listening, or he must be looking at the same economic indicators or inputs that we are, because everything that you and I are spending money from the gas at the pump to our Turkey Day dinner, is a lot more expensive. And that's sticky. That's not transitory. And that's our whole point, which is, oops, it's not temporary. And when you have wage inflation, as we're seeing because of supply constraints, and there's help wanted signs everywhere in the United States, so a lot less people to go around to help with this economy. Again, it's still a Trump economy. The Biden administration has changed some things, but the Congress has yet to change the pro-growth strategies, plus coupled with supply constraints and COVID and bottlenecks all around the globe, and still high volume of demand by the consumer. Consumers still healthy. We are now seeing the perfect storm. So we can officially retire the word transitory because inflation is here to stay. So Blanke Schein Wealth Management, if you've been following along, or our clients, you are well positioned for this. Both what's happening today in the market, because as soon as that information was released, that headline, markets took down a leg down of about 500-600 points, and that's where they are right now as we speak, on the heels of last Friday, which was also another huge down day. Blanke Schein Wealth Management, you'll notice if you're a client, you have cash on the sidelines. We're waiting for these opportunities to position and take advantage of stuff that's on sale because it was a little overpriced and overvalued. Now, if you have good quality, well-run companies that we love that are paying dividends, we're going to keep them. We're not going to panic. We're long-term. Stocks are long-dated asset classes. So this is a short-term, maybe 2-3 weeks into the close of the year, potential story that could play out because the Omicron variant or Omicron variant, I really don't know. I apologize, but there's the unknown unknowns. And that's my second topic right now, which is that's what moves markets. It's not the knowns, it's the unknown unknowns. And I know it's kind of repetitive, but it's also true. It's the things we didn't see. That's why we keep the cash on the sidelines. And if you have cash at the banks, bring them to us right now because you're actually losing money. Why are you losing money? Because the Federal Reserve just told you you're losing money if your money is in the bank because the inflation rate last quarter was 6%. How much is the bank paying you? I'm waiting for it. Yeah, it's less than 1%. It's like probably 25 basis points. So that spread, obviously it's not a 6% inflation rate annualized, but it's well above the inflation target, which is the 2% target that the Federal Reserve has right now. That's going to cause them to move quicker in terms of taking away the punch bowl, as I said before. Even Jack Schein was here last week, and we had that same conversation, in that the Federal Reserve will remove the accommodations, and once they remove the accommodations, they're going to sort of continue the pace of tapering and increasing that. So removing the punch bowl, turning on the lights, and getting everyone out because the party's over. In terms of the accommodation, why would that be, Rob? The economy is very, very solid right now, and that gives the cover for the Federal Reserve to go out there. And now interest rate horizon analysis is going to change. All the speculation. Are they going to move in May? Well, there's a 56% chance, betting odds, that they have their first rate hike in 2022 in May. That could go higher, that could go lower. We don't know. It's an unknown unknown because of the COVID variant. And we're going to have let me mark this right now on video. We will have another Delta or another Omicron. We will have another variant. That's the nature of this. Markets see through that. So it wasn't the unknown of the variant that's moving markets. It was the Federal Reserve actually admitting that they were wrong, because inflation is here to stay and it's not transitory. So I made reference to my Bloomberg interview. I talked about that. It's replayed for you if you want to watch my Friday Insights. We also talked about that as well with Schein last week. And we're also literally positioning ourselves right now for a year end. Here at Blanke Schein Wealth Management, we're also squaring up portfolios, so making it tax advantageous. It's not about what you make, it's also about what you keep. So we want to make certain that we can square up any losses with any gains. If you have outstanding capital gains outside of Blanke Schein Wealth Management or losses that we need to know about, please pick up the phone and reach out to us so that we can manage and position your tax outlook accordingly. Again, thanks for watching, and that's our update today. But we're watching the volatility. It's going to persist because, again, there's a lot of transitioning to non-transitory for inflation. The Federal Reserve is now officially changing their stance. And one final note, in the commentary today, Janet Yellen was asked in front of Congress. They said, hey, back then, years back when you were the Federal Reserve Chairman, remember she was, they asked her about the national debt at $17 trillion at the time. This is years back. And she said that she was extremely concerned about it. It was the number one thing. It was the number one concern about America and our biggest concern financially speaking. And they said, well, now we're basically ballooning to just under 30 trillion from the 17 to 30. And now you're Treasury Secretary. And if you pass the Build Back Better, which she positioned herself properly to say, or improperly, who knows, time will tell, to say the $2 trillion that they spend is going to be completely paid for, and you and I won't have to pay a single cent for it because it's already paid for the way they figured the math. But they say, listen, we're at 30 trillion, 29 trillion right now, it could go to 32 trillion. Are you concerned about the national debt today? And she said, no, I'll let you know when we're going to be concerned. So way back when, at 17 trillion, she was super concerned. It was the number one issue. And today, at almost double, we're getting pretty close to double when she said it was number one concern. It's not a concern. Let me tell you, it is a concern. How we position ourselves, because inflation is here, the market is telling us this. Federal Reserve just changed their tune. You want to own long-dated assets. You want to own stocks. You want to own real estate. You want to own metals and the complex in there. And you want to own things that will grow outside of inflation. Because again, the markets are telling us one thing and our politicians are telling us something different. So who do you believe? Stay tuned, and we're going to follow this story as this plays out. In Blanke Schein Wealth Management, we're going to position our clients accordingly. Have a great day, and we'll catch you again next time. And this is our last broadcast for November, so here comes December, and we close in on the year pretty quickly. Take care. Have a great day.